You've just received a settlement offer from your insurance company, and the number is nowhere near what you expected. Before you panic or get frustrated, pause. In this video, I'll explain why insurance settlement offers are often low, how these numbers are calculated, and what options you actually have next, so you can make informed decisions, not rushed ones. Low settlement offers are far more common than most people realize. They don't necessarily mean your claim is invalid. They usually reflect how insurance companies evaluate claims internally. Insurers are businesses. Their offers are based on formulas, databases, and policy terms, not on inconvenience, stress, or personal attachment to what was lost. Understanding that process is the first step to responding effectively. How insurance companies calculate settlement offers. Settlement calculations are built from multiple components. The process usually starts with a damage assessment. An adjuster evaluates your loss using standardized methods and industry databases. For property claims, this often includes replacement cost estimates, depreciation based on age and condition, local market pricing. This can result in numbers that feel disconnected from what it would actually cost you to replace items today. For auto claims, additional factors are considered: vehicle age and mileage, prior condition and history, regional market values. For medical claims, calculations often involve treatment necessity reviews, usual and customary charges for your area, policy limits and coverage rules. Each of these factors feeds into a formula that produces the final settlement amount. Policy details also play a major role. Deductibles, coverage limits, and exclusions can reduce settlements, sometimes significantly, even when the damage itself is clear. Liability is another consideration. Even when the fault seems obvious, insurers may evaluate contributing factors to reduce the amount they believe they owe. That analysis can result in partial, rather than full, compensation. Common practices that influence low offers. Many insurance companies rely on software-based estimating tools. These tools use regional averages and historical data. They create consistency, but they don't always reflect unique circumstances. Initial settlement offers are also often conservative by design. They allow claims to close quickly, while leaving room for adjustment if additional documentation is provided. Some insurers use preferred vendor pricing, which can influence repair or replacement estimates. This may explain differences between insurance figures and independent estimates. Time pressure is another factor. Initial offers may imply urgency, suggesting that faster acceptance means faster resolution. That can discourage careful review. Remember, speed benefits the insurer more than it benefits you. Why documentation matters. Documentation is your strongest tool. Start by gathering receipts and proof of purchase, ownership records, warranty and maintenance documents. Photographs are especially valuable. Clear, time-stamped photos showing the extent of damage and the condition of items beforehand can make a significant difference. Independent estimates matter. Quotes from contractors, repair shops, or medical providers offer real-world pricing. They can highlight gaps between insurance calculations and actual market costs. For medical claims, detailed treatment notes, diagnostic reports, and physician recommendations help establish the necessity and appropriateness of care. When negotiation makes sense. Negotiation is reasonable when documentation shows clear discrepancies, local prices exceed insurance estimates, unique features or upgrades were overlooked. If your policy coverage appears higher than the settlement offered, requesting clarification and adjustment is appropriate. Complex claims, or those involving multiple types of damage, often require closer review than an initial offer provides. Negotiation usually begins with a written response. This response should clearly outline what you're disputing, why the settlement may be inaccurate, what documentation supports your position. Clarity and organization matter more than emotion. When to stop negotiating. Sometimes continued negotiation isn't productive. If an insurer won't explain its calculations, won't review documented evidence, or won't engage in good faith discussion, other options may need to be considered. Time and energy matter too. Extended disputes require effort, patience, and sometimes professional input. In some cases, accepting a reasonable offer allows you to move forward. One important reminder: once you accept and cash a settlement check, the claim is usually closed. You typically can't seek additional compensation for the same loss. That finality makes careful review essential. Final thoughts. Insurance settlements don't have to be overwhelming. When you understand how offers are calculated, document your position thoroughly, and evaluate your options calmly, you put yourself in control. Most claims resolve through communication and documentation, not prolonged conflict. Approach the process in an informed, organized, and realistic way. That's how fair outcomes are reached. Thanks for watching. If you're dealing with an insurance issue right now, take a moment to pause and review your options carefully. Understanding the process gives you more control than reacting under pressure. In upcoming videos, we'll cover claim delays, under investigation notices, how insurance appeals really work, and when professional help actually makes sense. If this video was helpful, you may want to subscribe. More clear, practical guides are coming soon.